Hello, everyone, and welcome to another edition of the Forex Technical Market Update. In this update, we're going to speak naturally about the markets and what's happening, but I want to briefly speak about your trading time frame and how to select a trading time frame, because we receive a lot of questions from traders about what time frame to trade. And I remember when I just started trading, I used to trade the 15-minute chart and the 5-minute chart. And in order to trade those charts, you have to be constantly in front of the screen. So what I used to do was wake up, because I was on the east coast of the United States in Miami at the time. I would wake up at 2 o'clock in the morning, prepare for the London session, and trade until 11 o'clock. Now, what that was, or what did was that it made trading very stressful, because I'm not naturally up at 2 o'clock. And trading then started to become like a job, and it was very tedious. And if you step away from the chart for a few moments on the 15-minute chart, you could miss something. So if you want to trade a time frame, or more specifically, you have to determine what your lifestyle, or what do you want your lifestyle to be like. If you want to be in front of the screen all day, then by all means you can trade the 50-minute chart. If you want to be able to step away from the screen and go for the longer term swings in the market, you will trade the hourly chart or the 4-hour charts, or even step up to the daily charts. And there's nothing wrong with trading the hourly charts and the daily charts to give your trading some variety. Now, a common misconception out there is that if you trade a longer term chart, you need more trading capital, and you can make less money. That is not true, because most brokers, you can adjust your risk depending on your account size. So you will be trading a 4-hour chart or hourly chart almost the exact same way as a 15-minute chart. So in determining your time frame, as I said, just pick or determine what type of lifestyle you want. Do you want to be in front of the screen all day, or do you want to get the larger swings in the markets? That's only something you can determine. And if you want to make trading less stressful and get the larger swings in the markets, then you are looking more on the hourly charts and the 4-hour charts. Okay, I hope that helped some of you with determining your time frame. And I know a lot of folks have jobs, and if you have a job, I would suggest you probably be a swing trader. And with a swing trader, you can just manage, or you can look at the markets every now and then, and still make a lot of money and not miss trades as a result of your job. Okay, as I said, I hope that helped. Now, we are still in consolidation city. What happened today was the market went up. This is the EURUSD 50-minute chart. The market went up to the daily R1 and has settled down so far at the daily pivot point. Looking at the daily chart, we see so far we have a doji candle. So not only are we in a consolidation, but we have one doji candle and possibly another one today. So nothing much is happening here in the Euro USD and the major USD pairs, except for the British pound, which is rallying quite nicely today, and we'll speak about that in a few moments. Okay, so as I said, we're looking for a breakout on the euro. So I am favoring the breakout to the downside, and we have positioned our portfolio for a breakout to the downside. If the breakout occurs to the upside, then we will take a small loss and move on to the next trade. Because when we're trading, we won't be 100% accurate. We just manage the losses and keep them small and let our profits run. Okay, moving on to the British pound. And as you can see, I've drawn the Fibonacci retracement from this swing high. And remember, this market is still in a series of lower highs, lower lows. So the momentum, although we have on the weekly chart, we have railroad tracks. Just remember that the momentum is still to the downside. And I don't really see any evidence that this momentum has been broken. So the market is coming up into the 50% retracement level, and the market could test the 618 retracement level. Taking a look at the pivot point levels, we have a monthly R1 at 152.99, and that coincides fairly closely with the weekly R2 of 153.47 and the 618 retracement level, which is at 151.79. So this area could become a confluence of resistance. For any of you who have attended one of my webinars, you know we speak about a confluence of resistance. So this area here could be very interesting in the British pound. It's still approximately 200-300 pips away, but that's something we can keep an eye out on for the British pound. Looking at the British pound, Australian dollar, which is in a consolidation pattern. I was going to speak about the fact that the market is getting resistance at this area here. Let's go to the 60-minute chart. Yes, I was going to say the market was channeling these are the area of support and resistance, but the market, as we speak here, the market looks to be blowing above that area of resistance. So I was going to say that this would be a good setup for the long side, but the market has blown through the area of resistance already. So the next area of first, when the market goes above the area of resistance, first thing we need to see is the market close above this area of resistance. So that will a close above this area here, which is 193.76, will be very positive for the bulls. But the larger test to see if we're gaining momentum to break out of this pattern is a breakout or a test of this downtrend line here. The market needs to close above this trend line and then above this swing high here. If that occurs, then that will confirm a breakout, and we could see new highs up to the $2 level in the British pound, Australian dollar. Okay, another market of interest I'm going to take a look at is gold. And we see that the market could be looking to make another leg down. If we close below this 1180 level, that will be very bearish, and the next area of support will be 1140, and a close below 1140 would be quite bearish for this market, and we could see further losses in the gold market. As I speak, the euro is heading downwards slightly, not a lot, but heading downwards slightly, and now is below the daily pivot point, and we'll wait and see if the market is able to close or to reach down to the daily S1 support level. Okay, so remember, if I hope you are enjoying these market updates, and I hope you find them beneficial. Trading the markets, I know, can be challenging, but if you have the correct information, then it makes it a bit easier. And a lot of what I see out there on the internet is a lot of information that will lead traders down the wrong path. And I know trading can be challenging, so it is very frustrating if you are led down the wrong path. Okay, now, as I said, if you want the signals, if you want to, or you may not have the time to trade for yourself, and you want these signals automatically copied into your trading account, there is no need to send anyone any money. No need to send or firm any money. You can just simply copy the trades that we are taking. And just a word about the trades that we take. We are swing traders and position traders with this account. So there will be times when the market is not trending very much. For example, now the market is not really trending very much, and the account activity will be fairly slow. But what we're anticipating is a breakout of these consolidation patterns, and that's when a lot of our profits will start to come. So remember, this is not a day trading program. It's more a swing trading, position trading program. Minimum account size, there's no real minimum account size. As long as your account can handle micro lots, that will be fine. Some folks start with $1,000. Some folks start with 5, 10, 15, 20. It just depends on your equity and your account situation. So if you want these trades sent to your account, you can click on the link below this video. And I hope you have a very good day. Thank you very much.